Hey Rahul, welcome to the show.
Hey Abhay, good to see you again. Been a few
Yeah,
months since we last met.
yes, it was great meeting you up in Goa and so great to see you. Happy
Likewise.
2026.
Same to you as well, Abhay. How's it
Great.
been so far?
I couldn't complain. Sun has been shining and Bitcoin is doing what it is supposed to do. So I feel blessed.
Yeah, that's good to hear. It's a good strong start to the year for I suppose for the industry as well in general in terms of the price holding up and lot of action on the gold and silver front as well. So hopefully Bitcoin catches up soon.
Definitely. So Rahul, introduce yourself to our audience. Who is Rahul Rajani?
Sure. So I am originally from Goa in India. I grew up there. I've spent my time traveling and staying across multiple places. I've lived in Goa. I've lived in Bombay. I've lived in Pune. I did engineering from Pune. I've worked as an electronics and telecommunications engineer for a few years. So strong technical background. Then, as most engineers do, I think I moved towards finance. Did the CFA program, which I think a lot of finance professionals take down that path. Did business school from Singapore as well, and then transitioned after business school towards working in the corporate life with Tata Telecommunications. So I worked with them for sales strategy, and then leveraging on the CFA program, shifted towards investing. So it's been quite the journey in that sense from learning. And yeah, now I'm currently working full time in Bitcoin. Trying to work in as many projects as I can. I like to say that I'm part of class of 2020, even though I heard of Bitcoin far earlier than that. But it's only in 2020 that the light bulbs started to go off.
Super. Class of 2020 is already like 5 years into it, right? So
Yeah.
amazing.
Yeah.
What's your Bitcoin story, Rahul?
So the first time I heard about Bitcoin was in business school. I remember distinctly our corporate finance professor. He said that there's this thing called Bitcoin, but I wouldn't touch it. I'd rather just take my Singapore bonds and just like lever it up multiple times and get 8-9%. And so obviously, I didn't pay much attention at that point in time. 2017, 16, 17 is when I said, okay, you see the price action and you think that this is something that you need to at
Yeah,
least study, right?
yeah,
There's something going on here. Having worked, being an engineer, and then moving towards finance, and blockchain technology being heralded as a new paradigm for finance. So I started trying to understand what it meant. At the same time, I was working for a family office and looking at allocating to the space.
hmm,
And I distinctly remember during my time, I just could not differentiate between each of the different currencies, right? Each of the blockchains. It just, if you have a full time job, even if you're mandated to go and study it, as you know, I think Bitcoin takes time for you to truly grok it. So instead of going and building a basket of currencies, what we did at that point in time was we just gave it to a fund manager.
yeah.
Did well, classic finance education, diversify your bets. So that did well, and on that back then I think it was during COVID when I had time that I read, I came across the Bitcoin standard. I went down that rabbit hole, read a few more books, and I was then able to truly have an informed opinion about what the differences are between each of the different currencies. And yeah, I think that was with what happened during COVID when the world stood still, markets tanked, and then just rebounded completely. Bitcoin picking up, that's when things started to click. So after that is when I, devoted more marginal capital only to Bitcoin compared to the other currencies. And then in 2022, 2023, I realized that as you learn more and as you go down the rabbit hole, you're like, hold on. I not only want to just stay invested in this, but I want to contribute to the protocol and the ecosystem as well. So it's been quite the ride. I think you just, as most Bitcoiners do, you just consider yourself fortunate as well to be there at the right place at the right time.
Yeah. Which year was the Singapore professor telling you I won't touch it?
2014.
Wow. So not much
2014.
has changed because I think Sailor either Fong Lee or Sailor said that they did another session at one of the Ivy Leagues. I think it was Stanford or something, and then he had a similar experience where we're saying why would I touch this and why
Yeah.
would I not do so many other things which are available in the world of finance.
Yeah, yeah. It's. I think it's a combination of groupthink. I think it's a combination of looking at the headlines. Again, not reading not going deep into what it actually is.
Yeah.
I think it's a factor of all of those things, right?
Yeah, and I'm guilty of myself for that because, as you were mentioning, if you have a full time job, you already have too much on your plate. It's already spilling out, and you want to kind of be control that and ensure that you're making progress. And these are all rational choices. And most of the times we're saying, hey, yeah, there are so many opportunities in this place that we are,
Yeah,
and if you are doing good, then definitely you feel more about saying, oh, I have something, a bird in hand is worth two in the bush, why chase? And then the time constraint does all the tricks. and
yeah,
and as you rightly were mentioning, that it takes some bit of time, 10, 20
yeah,
to 40 hours to try and get the sense of it, and most of us tend to reject it, and be swayed by the common media perception.
yeah. I think also the unit basis doesn't help, right? I think the fact that now it's at $100,000, it's amazing that people say that, hey, can I buy $1,000 worth of Bitcoin? I think it just shows the gulf in understanding. And so what I like to tell people is that it's not $100,000; it's $0.1 million, and then there's like, oh, that's an interesting way of putting it, right? Because it increases the scale and it shows people that okay, there's a different way to look at it. So
Yeah, yeah. And it's funny that you mentioned the unit bias because it works both ways. One is to someone who can afford 100,000 and says that it's too high. So the price is too high. I missed the boat kind of thing.
yeah,
And then there's other category of people that I've met who saying, oh, it's 100,000. I can't afford. I need one Bitcoin, so I can't
yeah,
afford it. And they forget that 100 million units make a Bitcoin, and that whole piece that you could buy for $100 also if you need to.
yeah, yeah, yeah.
Yeah.
So.
So, what does Bitcoin mean to you now, from first being introduced in 2014 in your finance class to now wanting to spend a lot more energy? So, what has changed in that, and what does Bitcoin mean to you now?
Yeah, it's. I think it's been an interesting journey, and there's this saying that you start off as a speculator, and then you look at Bitcoin as a savings technology, and I could see myself go through each of those. From 2014, thinking that hey, okay, this is something that's speculative that you can just punt on, just buy a little bit, even though I didn't. To then being developing a case of trading it, to saying okay, I'm going to get into a certain price and then get out, to then thinking, okay, from an institutional perspective, because that's where I was working, this is an investment. I could make a case for it. I could look at it from a 4 to 5 year horizon and then look to exit it after some time, after there's maturity, after there's its network effects grow. And then eventually, I think once you go deep enough, you realize that it's truly the most efficient savings technology that we have. That is that protects your capital, it protects your time, it protects your energy, it protects the work that you've done. So I think if I was to sum it up, I think it's a combination of just uh, it's a lifeboat for most people. I think that's the best way to describe it. It's in today's fiat world or today's financial system with prices increasing. I think it's that one asset that holds its value across time, that allows you the room to do what you want eventually. It allows you the room to survive in the short term and then grow from there. So yeah, I believe it's revolutionary in the sense that it's a protocol, and then it takes its standard route that money does, which is from store of value to then eventually medium of exchange, hopefully, I think there's a lot of talk whether we're going to get to the medium of exchange stage, and then obviously as a unit of account. So
Yeah, yeah. I think you very correctly pointed out the journey that most people follow, and these. I'm just repeating Sailor. I think the five stages where everyone is a skeptic. Everyone
yeah,
starts with being a skeptic, then to say, or actually, everyone starts being a denier, saying this is
yeah,
weird. This doesn't exist.
I
It's
don't want
not
to
for
touch
good
it.
people. I don't want to touch it. Then
Yeah,
then you become skeptic and saying, yeah, maybe there's something, but yeah, someone will ban it, something will fail, quantum will happen, this and that. And then
yeah,
you say, okay, fine, I'm seeing the number go up, so let me trade it, let me make money out of it. So you
yeah,
become a trader. And then from a trader you say, yeah, this seems like perpetually going up in every 3 5 year cycle, so let me become an investor. And
yeah,
then when you invest enough time, effort, energy, and resources, then you try and as an eventually become a maximalist, where
yeah,
you say, hey, this is the savings technology or a lifeboat. So
yeah.
help our audience understand a little more of why do you think it's savings technology. When I think about savings in an India context, I think about a savings bank account where I put my rupees and that's savings. How come Bitcoin is savings technology? It's a very speculative asset, according to me. So why do you think it's a savings technology?
Well, I think that the savings technology is derived primarily from its hard cap, right? It's that there cannot be more than 21 million. That's the code. That's why we're all here. You own a piece of that network. You own a piece of those 21 million coins, and hence you own equity in that. There can never be any more. You hold on to that value for the rest of your life till the time you spend it, and that's drastically different to how the current banking system works, which is fractionally on a fractionally reserved basis. The classic saying is, the money in your bank is not money. It's not yours, and it's not in the bank. And I think that's because it's lent out, and then the process of additional money creation in the current system. I think that is centralized. It's controlled by the few. It's distributed according to a hierarchy to those who have assets rather than those who don't. So it leads to those that are further down the economic ladder to feeling perpetually as if they're on a treadmill. And that's because eventually what happens is once new money is created in the current system, the price of assets get bid up, right? So you're talking about equities, you're talking about real estate, it gets bid up that then leads to inflation. So you have money creation that is occurring faster than the supply of all of these fixed goods and these fixed assets. And by the time it gets to you as an individual, if you don't own any assets or if you have relatively less amount of assets, you're facing, rise in prices and inflation around you. Interestingly, I think a lot of people conflate inflation with increasing prices, but I think the media and the zeitgeist has very inaccurately portrayed that as increase in share prices. I think inflation, by definition, is debasement. So the minute there is additional money units that have been put into the system, the symptom of that is increasing prices, but the term inflation is essentially debasement. So I think in contrast to Bitcoin, there cannot be any more debasement. You have a piece, and it's probably the most equitable form of monetary architecture that we have seen to date.
Yeah, yeah, that's so well articulated. I think many times to me, when we think about savings and savings technology, um, the most common reference comes as a savings bank account. But effectively, when I think about savings technology or savings, it effectively to me means how can I save my purchasing power? How
Yeah,
can I not save the units that I have? So if I have 1 lakh rupees, it's not how do I save 1 lakh rupees so that it becomes 1 lakh 5,000 rupees at 5% interest rate next month or next year, but can it buy the same or more goods and services and that purchasing power, and whatever helps us save that purchasing power is the savings technology. And while knowing unknowing, we all chase real estate, stock market returns, or the next big thing, because our inherent desire is to not lose
Yeah.
value, and we all are looking for a savings technology. And because there was no easy savings technology or simple savings technology, we all, while called it savings bank account, knew that that was not holding purchasing power intuitively. And that's why we all become the two job seeking. So we do
Yeah.
the main job, which might be an engineer or finance professional or a doctor or whatever, a teacher. And then we all have to become a finance professional, because now we need to hunt for that savings piece, which might be in real estate or in the next stock or in mutual fund or whatever.
Yeah.
But as you rightly mentioning, the 21 million hard cap, globally decentralized distributed technology where no one can do debasement, then becomes the protocol, which becomes the easy savings technology for everyone from across the world. All 8 billion people can store value in there, and then no set of people, country, or individuals or institutions can debase them. So I think, yeah, that's a
I
great
think, yeah, I think the other important thing about savings technology is also you want to be able to use it. One is obviously the purchasing power as well.
yeah, yeah,
But assuming that you have invested in an asset or into a stock or whatever it is, that does hold its, if you are good enough and lucky enough to be
yeah,
able to select those
yeah,
things, also there is a counterparty risk,
yeah,
essentially, right?
yeah,
Be it in stocks as well. It's, you don't technically own it. It's not a bearer asset. It's not gold. It's eventually built on the form of credit money rather than commodity money. We've moved from a gold-based commodity money to then a credit money, and this I think gives the opportunity to go back to a bearer asset, which also is an important form of savings.
yeah. Completely agree. Help our audience understand a little more on counterparty, because many times counterparty, because it does not surface so commonly and easily every time, and there's some backstopping by most of the countries, either central banks or some other institutions. Sometimes the counterparty risk is not very visible. So help us, any examples that you think, that if there is in a place counterparty risk, what could happen, and in Bitcoin, because of lack of counterparty, or you remove the counterparty risk, what are the advantages that comes from it?
Yeah, I think the two, I could give you a macro example and a
Yeah,
micro example. I think there are two stark ones that come to mind recently. One is on the macro side. I think we've seen what happened with the Ukraine war. Russia had, had sold its commodities and sold its goods and services to accrue US dollars, which it saved in US treasuries. And then the US government, as everybody,
confiscated it.
just confiscated it, right, overnight, and said that your units are worthless. So in that sense, the counterparty risk was that as a note says, I promise to pay the bearer.
Yeah,
It says I promise, right? But as we know that human beings are infallible, so or rather fallible, however you want to put it, it led to the confiscation. And then on the micro side, I think one of the examples that comes to mind is the Canadian protest that happened during COVID,
yeah,
where there was I think the famous story was an old lady that made a donation, right, to the protest movement, and she had a bank account frozen. So I think, in terms of authoritarian overreach, in terms of control, there is an element where, again, there is a counterparty risk. We see counterparty risk also technically in real estate as well. In the US, they've seen increasing in house tax, in real estate tax, in council tax. Even in the UK, there are specific taxes in specific councils that they're increasing depending on the value. So I think that then brings about a bifurcation in society in terms of somebody deciding who gets to keep what, and obviously that's a very slippery slope, right?
yeah.
So these are instances, I think, for better or for worse. I think they open our minds in terms of taking care of what you truly own and where you keep your time and energy.
And how does it work on Bitcoin side, and why there is no counterparty risk in here?
Well, with Bitcoin, what happens is you own the asset, or rather, you own a space on the ledger. That ledger space, so that public address is controlled by you and your private key. It's always on you. You should self custody it. Again, if you have that on an exchange, you don't really own your Bitcoin.
Yeah.
You own a promise to the Bitcoin, which again is opening you up to counterparty risk. But essentially, what this allows you to do is transfer money. You're sitting in Canada right now, or the US.
Yeah.
I'm in the UK. I can send you Bitcoin without any third party intermediary that verifies whether what I'm sending you I have it or not, right? And you receive it instantly. So once I transfer it, it's yours. You get to keep it and do whatever you want with it. And so that gives you a lot of flexibility in terms of what you own. And obviously, the value of what you own is backed by the Bitcoin network and its infrastructure. So a drastically different system to the current financial industry, and revolutionary to that effect.
Yeah, yeah, fully agree 100% that if you have sats or Bitcoin on the Bitcoin blockchain, then you are the sovereign owner of those units. And if you that inherently assumes that you've self-custodied it, so you've removed it. So you could own Bitcoin, leave it at an exchange, and then you're taking a counterparty risks for
Yeah,
the exchange to make good when you want to sell it or when you want to own it sovereignly. But if you sovereignly own the Bitcoin, which means you hold the keys, then you have the sovereign asset. You and only you are in control of it. It's global, so outside the jurisdiction controls of any particular one nation or set of people, and outside of any coercive taxation or anything on it. So yeah, I fully agree that Bitcoin, the sovereign aspect of it and how counterparty reduction is a big feature which kind of removes or differentiates Bitcoin with any other financial asset. So to
yeah,
me, no other financial asset apart from holding gold in your own custody is comes close to it, because
yeah.
even gold held at own custody can be confiscated by a gun to your head.
Yeah,
I think Bitcoin also gun to a head is a very stretched argument, but effectively, it unless you give your keys, it can't be confiscated.
correct.
Yeah,
Absolutely. Yeah.
yeah, yeah. Great. So, what do you think about Bitcoin treasury companies? I know you were doing something in that space. So, talk a little bit more about, Rahul. What is Bitcoin treasury company, and what are you doing in that space?
Sure. So I think plain and simple, a Bitcoin treasury company is it could obviously be a private company, but I think the term has been popularized by Strategy and Michael Saylor, where he's taken a publicly listed vehicle, and he has collateralized it with Bitcoin on its balance sheet. So he started off with I think 250 to 300 million dollars, which he had in spare cash, and put it on his balance sheet. And what he soon realized is that in the listed financial space, investors were starved for access to Bitcoin and its performance. So the term that he uses for this is called constrained capital, where mutual fund investors, pension funds, etc., could invest in his stock to then get exposure to the Bitcoin on its balance sheet and the performance of Bitcoin. So that's how it started off. He's a trailblazer in this industry, and he's setting newer and newer sort of benchmarks for everybody to follow. He has now moved on to setting up his preferred stock as well, which we can get to. But I think for us, what we're trying to do is trying to put together a vehicle. We've acquired a vehicle in India, a listed company in India, and we are trying to quote to collateralize it with Bitcoin and then build its treasury, and then also invest in raise capital to invest in Bitcoin specific businesses, as well as energy businesses. Bitcoin, as you know, is inherently tied to energy. It's energy money. So that's the idea. We're still early days, facing quite a few headwinds in terms of regulation. But I think the intent is there to try and have that conversation where we can provide a vehicle for Indian public markets investors to gain access to Bitcoin and its performance. Because again, I think everybody loves number go up technology. India needs its financial system to be made more robust by capitalizing it and stress testing it with an asset such as this. And yeah, that's what we're trying to do. Um,
And what is it live? Like, are you at the liberty of talking more about it? And what are the headwinds you're facing, and anything that you would want to share?
Yeah, the company is live. Unfortunately, we were, and this is public information, so I'm able to speak about it. We were supposed to do a fundraise to capitalize the company with 30 to 40 Bitcoin. Unfortunately, we were not given permission to do so by the exchange, citing reasons linked to policy and Bitcoin's speculative nature. So I think there's this term called regulatory purgatory. So we're kind of in the middle of that. We're trying to engage with the exchange as well as the regulators to say, look, we understand that VDAs in India are speculative. India has unfortunately classified all digital assets as under one bucket called virtual digital assets. So they are concerned about all of the other currencies being put on the balance sheet and then value being eroded for investors. So we're trying to make the case that look, there's a difference, significant difference between Bitcoin and everything else. We're trying to say that as a listed entity, there are many benefits, both to investors as well as regulators, to have a vehicle that is audited, that is regulated. So yeah, still early days. Can't disclose much more, but I think as Bitcoiners, you try till you succeed, right? I mean, it's something that again, once you know the value of it, and once you know that a specific market needs it, you try and come up with as many solutions as possible.
Yeah. So it's interesting that you call out that yeah, in India, everything on crypto is classified as VDA, and in your mind, Bitcoin is a separate asset class, and VDAs or other VDAs are maybe separate. Can you help us understand that nuance a little better of why do you think Bitcoin is separate and how is it separate, and what does Bitcoin do versus other VDAs?
Sure. So I think the main difference is in the protocol itself and how the value of the network is guaranteed, how the system is audited. I think one of the nice ways to frame this is that we are all familiar with fiat currencies. So governments are able to create fiat currency. Anybody can create cryptocurrency, but nobody can create Bitcoin, right? And that I think that's the differentiation. I can spin up my own Rahul coin or a Abhay coin, and then market it, and then have investors come in, and as has been the case in the industry, leads to a lot of pump and dump and a lot of speculative sort of exposure to these sort of different currencies, right? And I think again, going back, the main difference is how the network and how each of the coins are audited. That is through the proof of work process. That's when you put physical energy to work. You go through the process of validating each transaction using computing power, and there is a reward associated with it for the work you put in, which is significantly different from all of the other coins, Trump coin, Melania coin, whatever have you, right? So I think it's that distinction in the US has taken place
Yeah.
by way of the Howey test, whether something is a commodity, whether something is a security. Security is if it's created and if it's controlled and if it's just distributed by a group of people. Um, Bitcoin, with its immaculate conception, we don't know who created it, but the person that created it put in place a protocol and has no say in how that can be adopted unless there is group consensus, unless the full network agrees to a change. You can't change it. So, in that sense, it's immutable. And I think that distinction is important because that is what then, as what happens with money, it sort of coalesces or it gets attracted to a single form. And we've seen that in terms of the Bitcoin dominance, the percentage value that it holds amongst all the coins. And I think that is something that we need to be able to communicate, articulate, and educate to not only people in our network, but also the regulators who have the right intentions, but maybe they've not reached that conclusion. I'm assuming.
Yeah. So if there was a regulator or a policymaker looking at this podcast, what would you want that person to take away between Bitcoin and other VDAs and how to classify some of this?
I think the main takeaway is that um, you have to look at why there is value accruing to Bitcoin and why that has stabilized. I think there has been a change, constant churn year on year on the or cycle on cycle on the top 10 cryptocurrencies by value. And Bitcoin's been right at the top across all cycles because that's the core innovation. There have been other coins that have been created, they've held their value and then they've lost it, and they've been replaced by the newer, the faster, the more sexier marketed protocol or technology. Um, I think there's going to be a race to the bottom in terms of what happens to all of these. So I think if a regulator is looking at this, you probably want to look at why there is one specific coin that is holding its value. What is underpinning that value? What is the process by which these coins are created? These coins are audited, and how that is different from everything else. And it doesn't take too long to reach that conclusion once you're shepherded to the right way to look at a certain aspect or characteristics to differentiate.
Yeah, yeah. I think also I again here on Michael's or Michael Saylor's definition, I find it very, very useful. The taxonomy and definition, where he calls out that how Bitcoin is digital commodity, stable coins like USDC and USDT are digital currency, and then there are other tokens which could be digital securities. And that definition and classification I found very useful because then it easily is able to, from the definition, what are the rules and regulation which apply to a commodity
Yeah,
would likely, if the regulator and the policymaker accept that definition and say, yeah, Bitcoin is more digital commodity versus other coins like Ethereum, Solana, or anyone else is more digital security,
yeah,
then the digital security laws will apply to those altcoins. And then the commodity laws, like how would you treat gold, silver, copper, oil, would apply more to Bitcoin. Would be a good framework to have, because with the proliferation of stable coins, there's a huge piece of saying, hey, what do we do of stable coins? And I
yeah.
think the definition helps classify it correctly.
Yeah, yeah. Let me ask you. I mean, I know obviously you through GetBit. I bought Bitcoin through GetBit, so thank you for keeping it a Bitcoin only exchange. From the early days to now, the new sort of interface. I think it's come a long way. So well done.
Thank
But
you.
let me ask you. I mean, is this even part of conversation in India? Is there that bifurcation? Is there anything that we as an industry can do to be able to drive this point forward?
I think there's many things that we can do, but if I was to focus all my energy into one thing, it would be definitions. If we get the definitions right with the policymakers and regulators, and they could have their own words and own classification, but if they could see why or how to classify this as commodity versus others, I think that will be a big win if we could get there. But it is hard because, as we know, that there is no CEO and no funding which is behind Bitcoin to kind of help Bitcoin classify itself. So it has to be a community or education exercise, versus there's so much more incentives for other alternative coins to kind of keep it commingled,
Yeah,
where there's incentive around it to say, I've seen so many times where there is this whole piece of people in many of the alternative exchanges will talk about Bitcoin, but would want to sell an altcoin because the business model is such that the more people trade, the exchanges make more money.
yeah,
Versus from our perspective, we are a very very boring business where we say, hey, you should just buy Bitcoin, hodl it, and learn about self custody, and over a period of time move your coins to self custody. And we just kind of very simple, you buy Bitcoin, and once you buy, we make a small bit of commission on
yeah,
that. And we don't want you to trade, we want you to hold it forever, never sell it.
yeah.
And that then incentive structures are different, and the way. So I think yes, a lot can be done, but the incentives driving and the monetary rewards driving a policy action one versus other are more towards commingling all of this into one asset class versus differentiating Bitcoin as commodity and others as a combination of maybe digital currencies on stable coin and digital securities on alternative coins.
Yeah, seems like something that Bitcoin Policy Institute India should pick up and drive home, because I think you're right. The definitions are extremely important. You don't want to throw the baby out with the bathwater. You don't want to. I mean, India as it is has, I think, missed out on a significant amount of capital that could have gone to this space.
Yeah.
But again, it's never too late. We're still very early. We're in your whatever it is, 14, 15, 16 of the asset.
Yeah, 17. Yeah.
17 now. See, time is flying. And so
Yeah.
hopefully that, we're able to work together as a community to drive that point home.
Yeah, completely.
Yeah.
Okay, so I want to be mindful of your time. One thing that I wanted to check, Rahul, that if I am a successful person in India, have a great job, I'm being able to take care of my family, I have a house, and now I have surplus money, and I am invested in mutual fund and real estate, and I've heard about this Bitcoin and cryptocurrency. What is your advice to me to say, hey, what do I do? Do I think about it? Do I dabble in it? Or I stay away and be with my equity mutual fund and look for the next real estate? What would your advice be? And if I do one versus the other, what could be the outcome difference?
Yeah, it's interesting after being, I think, now, like I mentioned, year five in this space. I think in the second and third year, once I started understanding what this really is, I started speaking about it to my close friends and family. And the first question they'd ask is this a good time?
Yeah,
And how much do I put in? Right? I think those are the two classic questions that any Bitcoiners is faced within their network. And I think if you have capital that you are investing, and you have a surplus that you're looking to build for the future, the first and most important thing is to just get off zero, right? It's just to just start. You don't have to. I think there is this inherent fear that is created on touching this thing, and
yeah,
you can, even if you want to start with 100 rupees, or even if you want to start with 1,000 rupees,
yeah,
just start. Right? It's not a hot kettle that is going to burn you, or cause you to go crazy. So
yeah,
that's the first bit to do, and then find time, I think, to be curious, why it is the case. Have conversations with people in your network, but then eventually, I think your allocation to this, and I believe your benefit from this, will be determined by the work that you do yourself.
Hmm.
We can point you in the right direction, but at the end of the day, what Bitcoin is for you to answer yourself. It's for you to find out yourself, and you to get that conviction yourself. So again, there's a lot of noise when it comes to education and to understanding where the signal is, where the noise is. I was lucky again to find the right books. I was lucky to find the time to read those books, and so I think two of them that come to mind again: Bitcoin Standard by Safety and Amos, Broken Money by Lynn Alden. I think they're seminal books that helped
Yeah.
me sort of develop that thesis. I think Broken Money more so
Hmm.
because of the history of money and the difference between commodity money and credit money.
Yeah.
So put in that time, put in that effort, and it'll be very rewarding. You learn,
Yeah.
you'll start seeing the world very differently, and I think you will change as a person as well. So yeah, just to summarize, I think get off zero, um, be curious, put in that work. Catch hold of your friend who's a Bitcoiner, ask them for the right material, and yeah, have fun along the way. I think.
Yeah, I think so beautifully put that getting off zero is important because you put some money in it, it automatically starts increasing your curiosity, and then maybe get the audible version of Broken Money. And if you're
Yeah,
in Bangalore, you're spending so much time on traffic,
of
or
course.
any other place in India, or
Yeah,
if you're doing flights across traveling, which I think generally is a large or a significant part of many of successful people in India. That time you could just kind of run through these books, and hopefully some curiosity will get triggered, and you would be on your way down the rabbit hole.
yeah. I think if you want to be a sovereign individual, then you can't wait for it to be given to you, right? You have to take it. It's there. You just have to take the steps towards it. Which is, by the way, another great book. Sovereign Individual is another
Yeah.
great book.
Yeah, I
Highly
love that book, Sovereign
incredible book.
Individual. Yeah, and so amazing that it was written pre-Bitcoin
Yeah,
in
yeah.
19, I think, 90s or something.
1995, 96, I think, is when
Yeah,
it was
yeah,
written. Yeah, yeah,
yeah, and it kind of already laid out of exactly how a transition to a digital currency will take place. So it's amazing book.
yeah, yeah.
Great. Thank you, Rahul, for your time. Really appreciate you taking out time talk to us, and look forward to doing this once again very soon.
Likewise, pleasure. Have a good one.
Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.